Hi guys, welcome to Crack the Code of Accounting. On this channel, we break down complex accounting principles into simple and easy to understand principles. Who are those to benefit from this channel? Students, self-employed, business owners, and the likes. If you have interest in accounting and you want to know how to manage your finance, you are welcome to this channel, and I'm very sure you are going to learn one or two on this channel. Things you need to know about the new Nigeria tax reform. As salary earners, we need to understand that tax has always existed, just that higher percentage of workers or employees do not pay tax before now. But it is now time for us to begin to pay our tax. Whether we like it or not, we are going to pay this tax. Now, what do you need to know about this new Nigeria tax reform? Firstly, you need to understand that as salary earner or as a salary earner, your tax is being calculated on your annual income. That is what you get in a year. So if you get 150 per month in a year, that means your annual income is 1.8 million. Your tax will be calculated on 1.8 million. So this tax is called personal income tax, which is calculated progressively. When we say progressively, it means that the more you earn, the more you pay. From this annual income, there are some deductions that are allowable. Some of these deductions are pension fund, life insurance, health insurance, housing fund. These deductions are allowable. When we say allowable, it means that you are allowed to deduct these expenses or these deductions from your income. When it is deducted from the income, the balance is what we now use in calculating your tax. That is taxable income. We call it taxable income. After your deductions have been made from the after the deductions have been made from the income, what we have left is taxable income. This taxable income is what we use to determine tax that you pay. As a salary earner, most applicably, you pay tax monthly. That is, we call it pay as you earn. That is, your total tax for a year is now divided by 12 to determine how much tax you are going to pay per month. As a salary earner that his or her employer has not been deducting tax, firstly, you need to get your tax identification number. You need to register to get your tax identification number. Subsequently, then you need to start paying your tax. Other ways you can pay tax as salary earner is when you have side hustle or you have other businesses that you do. And you need to know that as individuals that does transactions online via your bank app or via your using USSD code, narration is important, but the most important thing now is your evidence. When you give a narration to a particular transaction that you have done and there's no evidence to show that you really did that transaction might not be calculated as either expenses or any other thing. Now let's assume we have an employee whose annual gross salary is 7 million. His or her deductible or allowable deductions are pension, which is 7.5% of salary, 525,000 naira. Life insurance, 100,000 naira. National housing fund, 50,000 naira. Professional subscription, 20,000 naira. This professional subscription can be some of the subscription you pay for the professional bodies you belong to. All these deductibles are the deductions that are allowed to be deducted from your gross or from your annual income. Now let's see how we calculate this. First, let's calculate all the deductible. We have 525,000 naira, which is for pension, plus 100,000 naira, which is for the life insurance. We have 50,000 naira for the National Housing Fund, plus 20,000 naira for the professional subscription. Addition of all our deductible or all our deductions is 695,000 naira. Now let's calculate our taxable income. Our taxable income, this is our allowable deduction. Our taxable, now to get our taxable income will be equal to total or annual gross salary, which is 7 million naira, less our deductions, our allowable deduction, which is 695,000 naira. That will give us 6,305,000 naira. Get your tax. We are applying the progressive tax. We are applying progressive tax because tax, personal income tax, is calculated progressively. And remember that I said that there is tax free threshold. That's 800,000 naira. The first 800,000 naira of your annual income is not taxed. So that is our tax free threshold is what? 800,000 naira. We are going to deduct this 800,000 naira from our taxable income. Taxable income minus, which is 6,305,000 minus 800,000, which will give us 5,505,000 naira. Now this is what we are going to calculate our tax on. Why? Because this 800,000 naira, which is the first part of your annual income, is not taxable due to the law that was given. Now your first 3 million naira has an effect of 15% tax. 15% will be 15 over 100 times 3 million naira, which will give us 450,000 naira. The first 3 million of 5,505,000, we tax it with 15%, which gave us 450,000 naira. The remainder, which is 2,505,000, will be taxed with 8%. 2,505,000 will be taxed with 18%. 18% will now be 18 over 100 times 2,505,000, which will give us 450,900 naira. Now to get the total amount we will be paying for, this person will be paying for his or her tax, we are going to add 450,000 plus 450,900, which is going to give us 900,900 naira. This particular employee will be paying 900,900 naira as tax per year. But knowing that as an employee we pay tax monthly, this 900,900 naira will be calculated or will be divided by 12, that is 12 months in a year, to get the amount he or she will be paying per month. So let's do that. We call it pay as you earn. Pay as you earn. 900,900 divided by 12. 75,000 naira. 75,000 naira, 75 naira. This employee will be paying 75,000 naira, 75 naira per month as his or her tax. What you need to know about the new rent relief. The new rent relief provides that you can deduct 20% of your total or of your annual rent from your income, maximum of 500,000. What does that mean? For instance, if your total annual rent is 1 million per year, 1 million naira per year, you are allowed to deduct 20% of this 1 million. Now 20% of 1 million is 20/100 times 1 million, which is going to give us 200,000 naira. From this example, you can see or note that this 200,000 naira is not up to the maximum amount, which is 500,000 naira, that is provided by that relief, which means that you can deduct this 200,000. Now let's assume your annual rent is 10 million naira per year. The relief says that you can deduct 20%, which is 20/100 times 10 million naira. Now if we calculate 20/100 times 10 million naira, that will give us 2 million naira. This 2 million naira is above the amount that we are allowed to deduct, which is 500,000 naira. In this case, you will only deduct 500,000 naira, which is the maximum. The remaining 1.5 million will be your own private expenses. It will not be deducted from your income or from the total income you have for that year. I hope you understand. Thank you. Find this video interesting, kindly like, share and subscribe. In our next video, I will explain things you need to know as a self-employed that needs to pay tax. Thank you.